everyone, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it's a Thursday morning and fairly positive cues coming in this morning as well from the global markets. If you look at Wall Street, it did clock a fourth straight day of gains. Asian markets looking in fine fettle. GIFT Nifty also hinting at a higher start for the Indian markets. Of course, earnings season has been rather kicked off by TCS. We'll be talking about TCS earnings and of course what to expect from the likes of Infosys and HCL Tech as well. And we'll of course be taking up all your stock related queries with our technical expert on the show. So as usual, if you have any queries, send them in to us and we'll try and take them up for you as well. But before we go any further, let's take a look at the top headlines at this hour. Fourth consecutive day of gains on Wall Street, even as FOMC minutes flag high rates for some time. Investors will watch out for key inflation data for the month of September, due to be released later today. Asian markets also trade higher, while the GIFT Nifty, as I mentioned, is indicating a positive start for the Indian market. Oil cools off further as Brent dips to a little over $85 a barrel. In fact, Saudi Arabia has pledged to stabilize the oil markets in case of disruption due to the conflict in the Middle East. And that is, of course, something that has come as a relief for the oil markets. All eyes will be on the CPI data for September. Retail inflation is likely to ease to a 3-month low of 5.4% versus 6.83% in August. Food inflation is expected to have eased to 6.6% versus 9.94% in the prior month. IIP, meanwhile, for the month of August is seen growing at a solid 9.5% compared to 5.7% in July. TCS's dollar revenue growth shrinks for the first time in 13 quarters, even as margins beat estimates for the second quarter. Deal wins remain robust at more than $11 billion. In fact, Tech Bellwether has also announced a share buyback worth 17,000 crore rupees, a tad lower than what the street was expecting. Big tech earnings continue to trickle in. Infosys and HCL Tech will report their second quarter numbers today. Guidance on revenue and commentary on the demand environment will be keenly watched out for. Well, on that note, let me get on board our technical expert for today. Joining me is Brijesh Ail, who's the head technical and derivatives retail research at IDBI Capital Markets and Securities. Good morning, Brijesh. Great to have you on the show. First of all, I want to get a sense on where the charts are indicating that we are heading going forward, given the fact that we have reclaimed that 19,800 mark quite decisively. What is the next resistance level that you'll be watching out for on the charts, especially for today's trading session?
Yeah, morning. So to start with the Nifty, I think yesterday's close was quite a positive close. The way 19,800 is taken out today, being a weekly expiring, there is a slight possibility, because if you see for the last two trading sessions, there has been a positive momentum. So there is a likely chance maybe some profit booking might be seen during the end of the day. But then if you talk of the directional view, I'm quite a positive on the market. I believe if we see a weekly close above 19,800, then we should be heading for 20,400 on the higher side. Extremely positive for the month of October. I think this should be lower side 19,600 remains the base, which is also the 50-day moving average level. Net for the day specific, I think 19,900, some 100 odd points momentum can be there. That is the level where we may face some resistance for the day. But then directionally, I believe we are heading for 20,400 over the next couple of days.
We'll be taking stock of the IT pack with my next guest as well. But I want to get in your thoughts on where, or what kind of trends are you spotting on the charts when it comes to the likes of TCS. Of course, we had numbers yesterday and the stock will be reacting to it today. And later in the day, we'll be getting numbers from HCL Tech as well as Infosys as well. So, setup wise, how is it looking for the IT stocks?
There has been a run up in the TCS in the last 4 days, and I think after the result, if there is some amount of correction to 3,500, so I think that's again a buying opportunity, because as long as the charts are holding about 3,400, it's in an uptrend, because I do believe it's moving out of its congestion zone. Anywhere close to 3,500 should be viewed as a buying opportunity. As in the short term, I think TCS will perform, and levels of 3,750, 3,800 should be on chart. So today's decline should be viewed as a buying opportunity.
All right. And what about Nifty Bank? How's the setup looking there? We have cleared that 44,000 mark. So what is the next level that you'll be watching out for there?
Slightly cautious on Bank Nifty because Bank Nifty is one space where the performance is not viewed. And even though yesterday there was a buying in Bank Nifty,
Right.
I would like the chart to close above 45,000. Once we have that confirmation of 45,000 closing, then there will be a good amount of short covering can be seen in the Bank Nifty as well. So by any chance, the way I spoke for the Nifty at 19,800, the levels for the Bank Nifty comes at 45,000. So above 45,000, I think the Bank Nifty will see a fresh rally. 46,500, another 1,500 points should be the immediate rally, and then gradually we should see upside move.
All right. Particularly for IndusInd Bank, I think the shares were, muted yesterday. But there is news flow that the RBI has in fact allowed SBI MF to acquire up to 9.99% stake in the bank, and that will be done within 1 year. Looking at the chart setup for IndusInd Bank, Brijesh, yesterday it was fairly muted, and of course we know that banking pack as a whole has underperformed the market this year itself. This year at least. Would you say that this bit of news could provide a bit of a booster when it comes to the stock price of IndusInd Bank?
Specifically for IndusInd Bank, 1400 has been a very strong base. And the stock never corrected below those levels. I think on a closing basis. So I think this would be a buying opportunity. Somewhere we believe 1600 is the target next 2-3 months kind of time frame. So it's a buying opportunity. I don't see a major correction. Just in case if there's a dip also, it will be bought back. 30, close to 1400, I think one should take a call. 1350 would be a safer bet, and one should play for 1600 plus levels. This view would be for next 3-4 months kind of time frame. But definitely, we are having a very strong positive view on IndusInd Bank.
All right, a strong positive view on IndusInd Bank. But as we wait for our next guest, let me take up some of the queries, stock queries that are trickling in at this juncture. Of course, we have seen Realty Index hit fresh highs in trade. In fact, it is perched at a fresh high, fresh 15-year high. And this morning we have a query coming in from Sai Kumari and wants to know your thoughts on DLF. When I have been speaking to experts, they believe that DLF, is one of those stocks that is poised to, gain from the uptick that we have seen in the real estate market, and one of the steady players in the real estate segment, so to say. How are you approaching DLF now, given the kind of rally that we have seen? Do you think investors should book profits on rallies, or should they hold on to it? And how should they play something like a DLF right now?
Clearly, if I look at the option data, so there eventually a few days before at 560, there were a lot of call writing was seen in DLF, and now that call writing has got unwinded. So now the fresh longs have been built up close to 580 levels. And even from the technical point of view, I believe this momentum will continue till those levels. Somebody is holding a position FNO can look for 580 call option as a buying opportunity also at this level, because the momentum is quite very strong. There is a clear-cut breakout, and even in the cash market, if somebody is holding a position closer to 580, I think one should one should review the position.
All right, Brijesh, hold that thought. We'll come back and discuss more stocks and take up more queries with you. But let me also bring on board our next guest for today. Joining me is Deven Choksi, who's the MD at DR Choksi FinServe. Good morning, Deven. Thanks a lot for joining in this morning. I want to first get a sense of what are you making of the TCS numbers and the kind of buyback announcement that has come. Going by what the company has reported, revenues of course have missed estimates. Dollar revenues have in fact fallen for the first time in 13 quarters. Margins, however, have been above estimates. But given the kind of commentary we've seen from the management, do you think the recovery that the street was penciling in could get a little delayed going forward? And what do you make of the buyback announcement? In fact, do you think the street will be a little disappointed given the fact that we were expecting somewhere around 18,000 to 21,000, right? So this amount of 17,000, do you think this will come as a tad bit of a disappointment?
I'll address, good morning. I'll address, I think, both issues one after another. On one side, the results of the company as expected in the second quarter, I think is definitely, I think, on a lower side. But I think street is not something which is, street has been, I think, expecting lower results from IT majors in this particular quarter, largely because of the fact that many of the customers have been reprioritizing their orders. and as a result of which, I think they have been relatively weak in getting the new order inflow into the books in the given quarter. However, having said that, I think the commentary also suggests that the customers are deprioritizing and at the same time releasing the orders. So hopefully in the second half of the year, where the expectations are, January to March quarter would probably start releasing a larger amount of orders for the company. That is what the expectations are, and that's where probably I think the street will keep an eye on. In my viewpoint, I think the result per se, one should not be seeing too much of disappointment here. Also, because of the fact that I think probably the global economy is passing through its most challenging times, wherein the customers are expected to spend money on IT, but are withholding their spending largely because of the fact that the uncertainty continues in their environment. But the way in which cloud computing is happening, the way in which disruptions are happening in the industry, it is very univocally, it is coming out of one view from everyone across in the globe that they will have to spend big time into the IT. And that is where probably one can keep an eye on Indian companies receiving the larger orders. It's not that I think Indian companies not receiving orders and others are receiving. The situation is gleam. Otherwise, I think also everywhere. So from that perspective, I think it is a satisfactory performance. In my viewpoint, I think the buyback price, the second question is, I guess I think the amount is more or less in line with expectation. We were counting on 16 to 18,000 kind of an amount from the company for the buyback. Generally, one has seen that the buyback is more of a price stabilization mechanism than anything else. And at the same time, the company is basically improving the return ratios in their balance sheet by way of shrinking the equity and giving the cash away to the investors, shareholders of the company. So overall, in last five buybacks, I think one has seen a similar kind of a trend, wherein the equity has come down and the cash utilization has been, I think, made by way of paying it back to shareholders. So which has improved the ratio on the return on capital employed overall. I would not be very uncomfortable at this point of time with the buyback price. And also, I think the amount which the company has announced, I guess I think it's a relatively fair proposition that the company has spelled out.
Right. Of course, Infosys is also slated to report its numbers today. Revenue growth is likely to be tepid, on a quarter-on-quarter basis. And it's expected to reiterate its FY24 guidance of 1 to 3.5%. But any chance that you guys are penciling in, an upward revision in the lower end of the guidance, or pretty much expecting it to retain what it had guided for last quarter?
See, the third quarter or the fourth quarter of the calendar year and the third quarter of the financial year for us is generally, I think, a challenging quarter for most of the IT companies. They are not releasing immediately, I think, higher amount of the customers are not immediately releasing higher amount of orders in this particular quarter. Having said that, I think compared to previous two quarters, I think in this quarter, the chances are that they would release the order. In normal situation, they would not have, but in this situation, they might release the order largely because of the fact that they have withheld the orders in the previous quarters. Customers have withheld the orders in the previous quarters, and that is where probably they are likely to, I think, complete the release of orders so that from the next calendar year for them, I guess I think the business becomes normal. That is what the expectation is. And I think Infosys equally included along with TCS. I'm expecting that the announcement or the management commentary would probably address this issue. In my viewpoint, I think whatever the dry order book scenario which one has seen in last few quarters, or relatively low order intake scenario that one has seen in the last few quarters, I think that should be seen as a matter of past. Things are likely to improve from here on. May not happen, I think, that in one go the vehicle would move in the overdrive gear. I think it may probably gradually step into the higher gears as I see it in form of getting the new orders. I think one will see gradual progress quarter after quarter. So even the same situation like TCS or Infosys, I'm not too sure whether I think one could possibly argue for improving the lower band of the guidance. Generally, this company has been doing it in the second half of the financial year by improving the guidance. But like this time around, we'll have to see. But as long as they get the longer duration order and the large size order, even they come little bit slow and less, I would still think that the situation is not as bad as the market is basically giving treatment to the stock as.
All right, let's shift focus to the OMC pack now. Devin, given the fact that there's no clear trend emerging when it comes to oil prices, they have been, of course, fairly volatile. Given what's happening in the Middle East, they have cooled off this morning around $85 or thereabouts from 97 that we saw, in the last few days. So, in the current scenario, how are things shaping up for the OMC basket? What is the landscape looking like there, given the fact that, of course, oil prices have been so volatile?
So on one side, the winter is setting into the Western world, and as a result of which the fuel demand is increasing. Even the crude oil cracks, be it in form of diesel, be it in form of petrol, aviation turbine fuel. I think you are likely to see the higher demand and the consumption happening in the winter months in this particular quarter and the next. So from that perspective, if you see, the crude oil prices have already been adjusted to higher level, also because of the fact that the crude oil production cut has been done by the OPEC countries. On the other side, the demand scenario remains pretty strong for the refining products in a global market. And that could possibly be, I think, a savior for companies like Reliance, who are basically exporting more than 60% of the refining products to the other markets of the world. Even the, I think, overhang of the windfall tax, which is there, is largely for the domestic market than for the exports. So companies like Reliance would have to be separated out from the entire OMC pack that you are referring to. In my viewpoint, I think the Indian OMC, the public sector OMC companies, will have a challenge to continue on two grounds. One, there is a windfall tax which will prohibit them from getting the higher amount of profit into the books. Second, the crude oil prices have gone up to an extent. I think they have to absorb this crude oil price adjustment into the books because the states are entering into election in these 2 months. So obviously, ahead of election, the government is not likely to allow the OMCs to increase the prices, and that is a scenario which continues every year in any way. Next year also is an election year. So I'm not too bullish about the situation at OMCs at this point of time. On one hand, they will have to absorb the higher crude oil cost. On the other side, I think they will not be getting the advantage of market price. And if at all the market price advantage had to come, I think it could have been pocketed by the government by way of a windfall tax. So I don't think that I think immediately one is having argument for going into OMCs for investment in the portfolio.
Very quickly, I want to get in your thoughts on the TVS Motor. We have had some very, optimistic calls coming in on this stock. Of course, it is a play on export recovery. It has gained market share in the EV two-wheeler space as well. But, we have to remember that this is one of the most expensive stocks in the two-wheeler space. So how would you approach this stock now vis-a-vis the other two-wheeler stocks?
So the market has actually priced all the possibilities in my viewpoint as far as TVS is concerned. And to a greater extent, I think in the large cap two-wheeler stocks, I think the market is pricing most of the possibilities as I see it. The export markets have opened up and those markets have started giving the better amount of orders. But given the current state of situation, particularly into into these Gulf countries, in Egypt included, I think some amount of disruption is likely to take place once again. Companies like Bajaj Auto, which has a market in Egypt particularly, I think they would have a situation wherein probably they might see some kind of a disruption into the business of the company. At least I think if not more in some percentage. Because of the disturbance happening in the nearby countries. Nothing happening with Egypt per se, but nearby countries. So from that perspective, I think you might see some amount of near-term challenges. I would think that corrective downside in the price, if at all it happens, that will be a better opportunity to buy into likes of TVS, likes of Bajaj. At this point of time, I would probably, I think, wait and watch. And because upside in these stocks, I think is not seen happening immediately. So maybe I think one could wait and watch and probably buy it a little dip or the smaller fall that one would get in the markets.
All right, that's the view on TVS Motor. I wish you could have a longer conversation, Devin, but we are running out of time. Thanks a lot for joining in this morning and sharing your thoughts with us. With that, let me go back to Brijesh and take up some viewer queries that are trickling in this morning. Ashok Kandukuri wants to know your thoughts on HDFC AMC, Brijesh. How do you think this stock is looking on the charts, given the fact that over the last 1 month or so, it has been fairly volatile, even though it has given positive returns in the range of somewhere around 4 to 5%. So if somebody is holding on to this stock, should they continue to hold for a few more months, or if they want to book profits, do you think it's time to book some of the profits that they're making?
Yeah. So the trend for the HDFC AMC was positive. So currently, in the last couple of days, again there was a good amount of buying which has seen. The stock is slightly moving from the current range to the high level range. 3,000 is the all-time kind of a resistance zone from where the selling has come. So I think this momentum will definitely lead a rally towards the 3,000 mark. So one should stay invested. There won't be a major correction. Slight 1,500 points might be a dip. Maybe if the market correct, there can be a possibility. But then in a reasonable time, I think 3,000 plus should be the target for the HDFC AMC. One should hold the position.
All right, one should hold the position is the call. Hope that answers your query. But let's take up a query from Trilok. This one is coming in on HDFC Bank in particular for the short to medium term. Of course, there were concerns of near-term margin trajectory in the wake of of the mega merger with HDFC. But off late the stock has staged a turnaround as well. Going forward for the medium term, how would you advise investors to approach this stock?
So specifically HDFC Bank, there was been a breakdown during the 20th September, and it has broken technically it has broken the 50 as well as the 200-day moving average. So whenever the prices break below those levels, it's in a downtrend or maybe a correction mode. Since it has broken from 1660 and it has made a low of 1500, the charts are in an oversold zone. So we are only talking about specific trading bounce. So this bounce may come close to 1580, 1600 max. But when we talk of the directional move, we are quite cautious on these HDFC Bank. We believe somewhere, even if Bank Nifty performs, it has a good amount of weightage. But then 1400, close to 1400 is what the directional view for the HDFC Bank. So until we don't see these numbers coming on charts, we are not recommending any positional view on the HDFC Bank. So very strictly close to 1400, maybe 1400, 1450. That should be the downside range which we expect on the HDFC Bank. Somebody is having a position from the trading perspective closer to 1580, 1600 should view to exit their positions and wait for declines to re-enter.
All right, 1400, 14450 is a strong level to watch out for on HDFC Bank. Hope that answers your query. But let me take up the next query. This is coming in from Vijay. Wants to know your thoughts on Dish TV. The stock saw a good pop in yesterday's session, 5.5% or thereabouts. Vijay holds 22,000 shares at 21 rupees 57 paise, which he had bought at. But the stock is now trading around that 18.5 or 18.5 rupees per share odd. He's making a bit of a loss here. What would you advise him to do?
I don't see much upside on the Dish TV. It's a sideways kind of what I can see. There has been a volume bar, but the maximum upside is something 22 is the mark where it seen a multiple times there has been resistance at a 22 level. So anywhere when it comes close to 22 level, I think he should exit and get into some good quality stocks.
All right, that's the view on Dish TV then. But let's talk about Varun Beverages. This stock is, being viewed as one of the major beneficiaries of, the ongoing World Cup tournament, right? Should one accumulate Varun Beverages at current levels and wait for more upside? This is the question that has been posed by Meet Jaitley.
I'm slightly disappointed with the Varun Beverages because there has been a distribution from the technical point of view. Distribution means there is a profit booking. And this clearly says that by any chance, if 900 levels are broken, anybody is having a position should take 900 as a stop loss. If those levels are broken, then a major profit booking can come, which can drag it back to 800 to 750 on the downside. Somewhere that comfort zone is not there. The stock has already rallied in the last couple of months. This is exactly 9 months the stock has rallied. And it is at the verge of giving some profit booking. So 900 should be a very strong stop loss for all the long trades because below 900, I think it will be heading for 800, 750 on the outside. somewhere that comfort zone is not there with the Varun Beverages at current level.
All right, that's the view on Varun Beverages. But what about the Zomato? Of course, it has cleared, the 100 rupee mark quite decisively. I think it's at a fresh 52-week high of, near 110 rupees or thereabouts. We have a query coming in from Balwinder Singh. He wants to know if it's a good buy even now, or should one wait for some bit of a dip to get into the stock now?
I think it's a good buy at current price also. We are talking about another 30-40 points from the current level. So, there won't be a major correction, at least right now looking at the weekly and monthly charts. I think this, even at 108, I think maybe he may not end up entering the 100% position at this level. But definitely, I would advise to take a partial longs at this level, because another 30-40 points move from the current level is definitely there on charts.
All right, that's the view on Zomato. But let me just take up the last query for today. We're running out of time. So this one is coming in on Rajesh Exports from Abhilash. Rajesh Exports has been a clear underperformer this year. In fact, the stock has shed somewhere around 35% on a YTD basis. It's been stuck in a downtrend. So if somebody has Rajesh Export shares, how should one go about it? Should one book losses or wait for a rebound to kick in?
Booking losses will be difficult, because the way the stock is corrected, I think it's a very sharp oversold. So some bounce will be there. I would view this anytime when we get an opportunity close to 500 levels. I think I'll take an exit call, because if things go wrong, there is a probability 350 can be the lower from the monthly time frame. So it's not quite good on charts. Bounce back close to 500 should be viewed as a exit opportunity, or else we review when it comes close to 500. But definitely right now the stock is in downtrend.
All right, hope that answers your query on Rajesh Exports. But with that, we've come to the end of the query segment. Brijesh, before I let you go, want to check with you, what are you flagging off for our viewers this morning?
There are two specific stocks which I do believe, I think over the next 3-4 days will outperform. One is the APL Apollo. It's looking extremely strong on charts. The current level is 1669. One should take a long position at this level, and the stop loss would be 1628. I am looking for 1735 on the higher side. This is again a positional bet. Next is on the auto space, Minda Corp at 344. It's again extremely strong. I've seen a very good volume breakout in yesterday's trading session, and this points for a good amount of upside. 333 would be the stop loss, and 360 would be the trading bet for the Minda Corp.
All right, those are the stock recommendations coming in from Brijesh this morning. With that, Brijesh, thanks a lot for joining in and sharing your thoughts with us, and of course addressing all of your queries as well.
Thank you.
Well, with that, we've come to the end of this edition of Morning Trade. From me and the entire team, thanks a lot for tuning in. But of course, stay tuned to Money Control, because coming up next is Opening Bell.